Yeah, wall of worry. So why are equity markets so primed to climb that?
Well, I mean, in short, I mean, I don't exactly know. And this is like you were just saying off the top there, we've got all these concerns, and there doesn't seem to be a material difference in what we've seen over the last few weeks in terms of the risks from tighter Fed policy. We've got swaps markets pricing in 8 hikes by the end of this year. The situation in Ukraine and Russia seems to be a little bit better than what it was a couple of weeks ago, but who can say with any level of certainty that things are going to de-escalate and we're not going to continue to see some of the economic disruptions brought about by what could be still a war that drags on and maybe even gets worse. And I still look at situations that are happening in China too. Obviously, that situation improved a little bit last week with the national team basically going in and supporting the market and putting a little bit of a base under asset prices there, and some nice rumblings that if we do see this sort of COVID situation exacerbate over there, that at least there might be some stimulus coming on along the way. But there doesn't seem to be a material difference as far as I can see in the I suppose fundamentals and certainly the narrative at the moment. I mean, I think there's kind of two opposing camps, perhaps you could say, at the moment in terms of trying to explain what's going on. You've probably got the more bullish one, which is suggesting that markets being the great discounting machine that it happens to be of information, or the stock market anyway, is that it's basically banking on as more of a signal, a forward-looking signal of positivity for things to come, that markets are banking that these things will just improve over time, and investors have basically priced in the negative news. The other alternative too is a little bit more technical. We had options expiry going into last week, and in sort of a bit of a reverse of the dynamic we saw after the start of the pandemic, where we often saw stocks drop basically as dealers were net sellers of stocks going into options expiry. The reverse of that's true now with sentiment reversing over the last 3 or 4 weeks. We basically had dealers, net buyers of stocks. That gave us this sort of artificial boost, and it's going to be short-lived, and we're going to see that end. Obviously, only time will tell. It'll be interesting to see how we trade into the end of the month. But I do think that if you look at the price action, things look, looks really positive across equities. Really high conviction moves. So, really strong sort of intraday breadth. Really high volumes, obviously notwithstanding volumes were very high because of the 3.5 trillion dollars worth of options expiring on Friday. But again, we really do seem to be in a much more positive frame of mind as far as investor sentiment goes. Again, exactly why that is, I can't tell, but the price action is certainly bullish.